What's shocking part about that bad mood is energy prices, certainly gasoline prices, have been declining. That's usually a major thing for mood.
Yes.
And the stock market's going up. Those have been two major issues. Consumer sentiment should be lifted.
Right.
But the bottom line for me is where it's going. We've been bumping on that national average gasoline price for about $3 for years now, and almost always drops towards 2. And the key thing is what stops it. Now, my base case for crude oils, it still goes to 40. That's not profound.
40.
It's for the last 20 years, it's bottomed there.
Yep.
And we have a glut. The problem is it's consensus. It still goes there. But one of the key things that's pressured gasoline prices to get below 3 and down to 2, almost every single time we've done it, certainly in the great financial crisis in 2014 or so, is the stock market has to back up a little bit, typically.
Okay.
And right now it's very expensive.
Sure.
But the key thing that's leading potentially everything is Bitcoin, unfortunately.
Yeah, wow. And we're going to get to Bitcoin in a moment here. I just was taken by the Goldman Sachs forecast, $52 a barrel in 2026. We saw $57, I think, just yesterday.
Yeah.
How does that jive with your forecast?
I'm with it. The problem is it's all consensus.
Yeah.
I started making the forecast for $40 a barrel in 2022.
Way before the crowd.
Well, partly because just knowing the trends and how it happens, and just look at example what's changed since then. More than 50% of vehicle sales in China now are EVs, and that's where the demand pools on the world. So the world's shifted.
Yeah.
We bring on more with less every day. It's a wonderful thing about technology, but it's the key thing is it's deflationary. So I still think we're going to bottom around 40. That's what we've done for many times. The low for this year is 55. That's about the U.S. break-even cost based on estimates from Bloomberg New Energy Finance.
Okay.
So typically you have to get below that break-even cost to offset these excesses.
Does that mean ExxonMobil's losing money below that level?
At some point, typically, yes. And then they find other ways.
Sure.
But typically what they do is bring on more supply. I mean, that's what farmers do.
Yep.
And then I look at the upside. Maybe we get a spike towards 70. I think most traders are just hoping they get some kind of reason to get a spike there. Typically it's short-term, so they can sell.
You know, it's an easy headline when we write about Russia, the war in Ukraine, and so forth, that the oil market's keying off of this. Is there enough oil at hand for that to actually move prices?
Well, that's the key thing. We jump on things that don't really curtail supply, like all the hostilities in the Middle East. They haven't really hurt supply. Russia, Ukraine actually increased it. It initially pumped up prices, which brought on more. So I don't know what it's going to take. God help us if something goes nuclear. We wake up and hear about fallout.
Right.
That would boost all commodities. But I right now, I don't see it. The key thing, the bottom line is if you're bullish crude oil or things like copper, highly economically sensitive commodities, number one prerequisite, you have to hope the U.S. stock market goes up. But there's a lot of indications that next year might be the third down year since 2008.
In stocks?
In stocks.
Yeah?
It's all kind of leading that way.
Can we start talking to Mike McGlone about the stock market as well? Are you doing forecasts on stocks?
Well, you can't help it. It's the key thing. When you look at these kind of commodities, particularly the ones that are very sensitive to the stock market. So here's a key fact. Crude oil is down about 20% in the year. And the year that the S&P 500 is up almost 20%. So just imagine if the S&P 500 drops 5, 10, 20%. That's a tilt towards deflation.
Wow.
And it typically is unfortunate. We're so correlated now. The stock market's so expensive. In my view, is the answers have changed. You can't really talk about a lot of these commodities without mentioning your view on the stock market.
Boy, really interesting the way this ties together. And then you add crypto to complete the picture here. This has been remarkable watching Bitcoin specifically fall out of bed. I guess Ether has its own issues here, but this is a broken chart. Is it another crypto winter? Where do you go from here?
I think so.
Yeah?
So I think we started a bear market in crypto. It's classic signs of a peak. What happened in 2024 is classic peak sign. First, we had the halving, the ETFs launched, and then Mr. Trump switched from antagonist to zealot. And that helped pump up the market, but we put in pretty specific peaks. Massive pile on ETFs to performance. And look what's changed since last year. This time last year, we were bumping around 100,000 Bitcoin. Now we're around 87. But the whole space has shifted over to acknowledging that the Trump administration is very highly involved. I mean, prices going up. If you invest in this space, you're helping Trump administration officials. That's just a fact based on what's been happening. A lot of the OGs, the tech geeks who were from the beginning, like the fact that cryptos were away from the system. And now they're dependent on it. So it's a key shift. And then the key thing, the bottom line for me is unlimited supply. You mentioned Ether, Ethereum. There's now 27 million cryptos listed on coinmarketcap.com.
Wow.
And the fact is, in 2009, there was one. So when people say Bitcoin is unlimited supply, I like to say, well, not really. Precious metals, there's only 4.
Okay. So what do you make of the sort of narrative now that ETFs broke Bitcoin, that the institutional aspect that the market was longing for was its biggest curse.
Classic signs of a peak. So
Yeah.
we launched.
Oh, wow.
Yeah, we launched a Bloomberg Galaxy Crypto Index in 2019.
Yeah.
The goal was to get to widely disseminated tracked ETFs, tracking an index and stuff like this in cryptos. We got that. It's not tracking that index, but we got that. So case closed. To me, the next key thing to look forward to is we have to purge some of these millions of cryptos that track nothing and are worth billions of dollars, get those flushed out, and then we can come to a bottom. So that's my base case right now. The key thing is we're so much more correlated and attached to the stock market now. To me, it might bring down the entire system. So I'm really afraid Bitcoin might lead to a Grinch stealing Christmas.
So this is my question here, because the huge sell-off we saw in stocks last week was blamed, at least the real shift in sentiment, on what was happening in the crypto market. Bitcoin led stocks lower. Again, that was not supposed to be the way this decentralized currency, or what commodity, or whatever you want to call it, was supposed to work. If that's the case, how are you factoring in the impact on the stock market, or is that partly why you have a down year in your forecast?
Yeah,
it stems from crypto.
Exactly. The key ratio I love watching is the Bitcoin to gold cross. The ounces of gold per one Bitcoin has collapsed. It's been a great leading indicator. Right now it's about 21. When Trump got elected, it was about 40. So that's broken down. But the fact in space is it's all tilted downward. I don't know what stops it. And the key thing I like to point out is you have to figure out, okay, has it bottomed? The day that the Fed switched back the expectations for a full cut in December was the day that Bitcoin reached 80 on last Friday. Wow. So look at that trend. And so I look at it as you have to watch it. And here's the bottom line is typically Bitcoin needs a rising stock market and low volatility to go up. It's almost been coordinated, but now 120-day volatility on the S&P 500 is the lowest if it's end of the year basis since 2017. So buried stock market volatility means there's only room for it to go up in next year.
So it sounds like you're short Bitcoin. Your gold call was a big one. We're at 41.63. It's up $23 an ounce right now. Is this as high as we're going?
That's the key thing. It was nice to get that one right, but to be honest, Joe, I had to take the pain. I started think it was going above 2,000. Started in 2020.
Amazing.
And then when Russia invaded Ukraine, I figured it's just a matter of time. But I had to get beat on that forever. Finally did. The problem is now I have to switch over from my technical to my fundamental, from my fundamental hat to my risk manager hat. And it's so far stretched versus a 60-month moving average versus most moving averages that in history, getting long gold from these levels is typically not work out well. And it's never bad to say take some profits. So I'm worried when gold takes alpha and it's so expensive that it means the whole system might be having problems. So to me, that's my indicator that we're overdue for a down.
And then people start to raid the piggy bank, whether it's gold or Bitcoin, to cover their losses in the stock market, and this loop starts going.